Joining me now is NBC News business and tech correspondent Jolene Kent from Los Angeles. Joe, I see you're checking your phone to see if it's come through yet. Also the host of Public Radio's Full Disclosure podcast, Robin Farzad. So, Joe, I haven't checked my phone either. Has it come through yet?
Yes, the Federal Reserve expects to raise rates between a range of 0.25 and 0.5. That's exactly in line with expectations. We do have one dissenter in this who preferred a more aggressive rate increase on the Federal Reserve Board, but taking a look at what this means is February inflation was at 7.9%, 40-year highs, as you said. Retail sales this morning coming in lower than expected, showing that people really are unable to afford their usual spending with these gas prices and grocery prices going up. And we're watching to see how the markets are reacting right now. And it seems like overall markets are reacting okay to the news. But when you look at this right now, this rate hike, what does it mean for you? Well, it means if you have credit cards, it means that your rates are likely to go up. Federal student loans, you should be okay if you're on a fixed rate. Private student loans, though, you do want to get into a locked situation so you don't end up paying more. The good news here is for people who are keeping money in a savings account, you may, for those online high yield savings accounts, see that interest rate go up. But we are seeing a 1/4 point interest rate hike by the Federal Reserve. Now, to put this in broader context, we are expecting at least 5, perhaps 6 rate hikes coming later this year by the Fed. The next Fed meeting is in May. But overall, the Fed is saying that job gains have been strong and part of their justification for raising rates here. But the idea really is they want to tame inflation. But the tricky part here for the Fed is really walking this very delicate line, right? You want to curb this inflation, but you also don't want to be triggering a recession, especially with all of the complicating factors out there. We do have a very tight labor market, so you don't want to risk companies having to lay off because of these developments. But right now, the Fed also saying that they anticipate ongoing increases to the rate, so you can continue to see more rate hikes. But I'm going to try and get a question to the Fed chair, Jerome Powell, here in just a few minutes at that press conference. But they say that they are prepared to adjust rates as needed. And that is very much a nod to the delicate situation that we're facing right now when it comes to the geopolitical situation, the rising, soaring inflation, these high gas prices, and, of course, the ongoing pandemic supply chain problem. Katie.
You know, Robin, I know a lot of things. I understand a lot of things. The economy and the Fed, not one of the things that is my strong suit. And I'm always curious. It feels counterintuitive to me that raising a rate, making things more expensive, would help slow down inflation. So can you just explain how that's supposed to work?
It's a little perverse. You kind of have to kill the economy a little bit, kill it softly to rescue it. This is micromanagement. You don't want runaway inflation in the way that we had in the late 70s and early 80s, that you have to send up interest rates to the mid-teens and nobody can afford a mortgage. Businesses are cutting back left and right. You have gas prices, which are already high. We have been eating a rate hike of sorts, a massive rate hike since about Valentine's Day in gas prices. You see it every time you pass a gas station. Every time you're filling up, you're seeing that course into the cost of other commodities and other services with people and fuel surcharges. But by way of reference, Katie, we keep talking about inflation at a 40-year high. The Fed was taking rates up to the mid-teens in 1982, and we're talking about bringing rates up from nothing by a 1/4 point increment. I mean, in some respects, he has justification to slam on the brakes even harder, but he's mindful, Jerome Powell is, of geostrategic tensions, Ukraine, gas prices every year. It's an election year. It's really a tricky job, and you have very few friends. Damned if you do, damned if you don't.